Jim Ying, I've been in the game space for 10 plus years with Xbox, Six Waves, Gree, and Tango. Currently working with CV Capital, which is Shanghai-based investment bank that brokers M&A and late-stage investment deals between China and Western markets.
I'm Mantin. Nice to meet you guys. Now I'm a director of product development of Seasun Games. Seasun Game is one of the leading game developers and publishers in China. Right now, we are actively looking for investment and M&A opportunities in the West. My personal role is at Seasun Game my major role is to leading the technology team for our upcoming AAA MMO action RPG. And my other responsibilities including to evaluate potential teams for investment or M&A opportunities. And also, right now, I'm facilitating the teams that we had already invested.
Hello, good afternoon. My name is Will Hummel. I am a manager for global investment at Perfect World. Perfect World is a Beijing-based transmedia company. We do film, television, video games. I work in our Western gaming group, helping us do investment and M&A in the United States and Europe.
Hi, my name is Amy. Work for NetEase, based in China. We are one of the largest developers and publishers in China. We do PC and mobile games. I've been running investments for NetEase for the past 4 years. We've been doing a lot of early stage to growth stage investments in PC, console, mobile studios. Mostly focused on mobile, but we look at a lot of cross-platform teams as well.
So I think, obviously, hopefully everyone knows, but the markets in Asia in terms of gaming are some of the largest in the world, but obviously also very competitive. So just curious, is competition the main driver of companies looking to sort of invest and acquire companies in the Western market, or what are the other sort of motivations for your specific companies, or just for the sort of landscape in general? Jim, you want to?
Sure. So there's definitely a variety of factors. I think some of the biggest ones is there is the strategic element of a lot of these companies are doing well in China. China, if you look at some of the products being released, some of the movement in the top grossing charts, in many ways is more competitive than Western markets. So a lot of these developers are seeing that their local markets are very saturated. They want to get overseas. In addition, there's also government regulations that recently passed where games need to go through screening. And for some of the smaller and medium-sized developers, this makes it even more challenging. And so for a lot of reasons on the strategic side, they're looking to go overseas. Another big element is on the financial side. So currently in Western markets, whether it's private investors or the public market, gaming content isn't an area that gains a lot of attraction. Whereas in China, if you look at some of the publicly listed companies in the gaming space, they're very, very high multiples. And so they're valued very highly. It's very easy for them to raise capital. And so there's an opportunity for financial arbitrage where they'll acquire a Western company with profits folded into the parent company, and they see a significant boost to their market cap. So I think those are two of the factors, but there are a whole host of others pushing this overall trend of Chinese companies looking to find Western partners and acquisitions.
For us, there's a push and pull factors. And yes, China right now surpassed US is the #1 gaming market in the world. However, the Western market, including US, Canada, and some European countries, they add together is actually huge. And for us, we're actually working pretty well in China right now, and also we're still growing steadily. So it makes sense for us to pursue more opportunities outside China, including West. And also, like what George said, the China market is highly competitive for us, which means only very good quality, high quality games could be successful. So that's why we are looking for partners working together in the West to create high quality games for both Western and Asian market.
Yeah, those were both really comprehensive. The only thing I'd add is that there's a strong drive for growth. The Chinese economy generally and the gaming market specifically are obviously huge and continuing to grow at very fast rates, but slower rates than they have in the last few years. And so I think a lot of companies are looking to the West for additional opportunities to continue to grow their businesses.
I think you guys covered it.
Awesome. Is there any differences, like, Amy, is there any differences for you guys, or obviously for everyone, when you look at, like, are the motivations different for, like, investment opportunities versus, like, pure M&A? I mean, how do you sort of look at those, like, based on your sort of company strategy and goals? Like, how are those similar or different for investment?
Well, for investments, we've been more acting as a VC rather than a pure strategic. So we do a lot of the more financial evaluations and obviously the team background. So we look at it as a business model rather than a strategic play into our company's game portfolio. So in that sense, it's different from the M&A motivations.
Yeah, I think so. Perfect World is, if not unique, maybe somewhat special amongst Asian developers in that or Asian publishers, that we've been in the United States for 8 years. And during that time, we have founded and acquired a variety of studios, many here right in the Bay Area. And we tend to follow a similar approach to the one that Amy just described, really focusing on personnel, talent, and working to enrich our portfolio of high-quality developers making high-quality games. Mm-hmm. And so I guess from that perspective, it is a bit more venture-oriented. We certainly engage in more traditional M&A of the sort that Mantin and Jim were discussing, but yeah.
So more sort of based on financials when it comes to M&A?
Yeah, we do both.
Okay, cool. Mantin, for you guys, for the opportunities like investment M&A, is it, obviously invested in, I think, at least one company here, is it talent and sort of like the VC model, or like how do you guys kind of look at the investment versus, you know, full acquisition? I don't even know if you're looking at that, but.
For us, the most important is talent team members, and that's why we are looking for teams here, because we believe the talent here is much more than the other spaces. Think about in recent years, many gaming studios closed and also large-scale layoff. That's why we know that there's a lot of talent teams or people waiting for resources and available to create their own games and projects. So for us, for investment, we basically just look at the team. If there's a good teams and they can show us they have a past successful experience and they have the insightful and creative vision for the future game developments, then we are pretty much engaged to them. And for M&A, we will look more about their current portfolio and also the assets to see if they are fit into our long-term strategy.
Cool. Yeah.
I'd say, a lot of the drivers are similar, but certainly there's a wide range of buyers or investors over in China, right? So you have some strategics who have a long history of gaming in both China and in the West, represented by some of the folks here, where they have their own publishing capabilities. It might just be more looking at the talent side, whereas there are other companies where they have a lot of capital over in China. They're looking to get into games, but they're looking more for full-fledged teams that have both the development, publishing, distribution capabilities, because they are going to be relatively hands-off, and they know that it's not their core area of expertise, at least right now. So, similar as in the U.S., you're going to have a full range of folks who are doing it for a variety of different reasons.
Cool. So I think focusing on sort of the M&A side, like full acquisition, I know there's obviously sort of a gray area between investment and M&A, but what are kind of the key factors that you guys are using, or your companies or other companies in the market are using to evaluate these opportunities, or sort of what are the things that are catching the attention, like the team size? Is there certain minimum requirements around revenue or team size or sort of experience or expertise when it comes to M&A? Like for folks that might be interested in that area, like you need to reach a certain scale, or what are the kind of factors that are, from your perspective, key to catching the interest of companies around M&A?
So the big thing that really jumps out for us currently is companies that are experiencing really strong, healthy growth, strong financials, transactions that are going to be value accretive for us. And then we're also always looking to expand our strategic capabilities in the West. So studios, publishing operations that bring synergistic value to our existing businesses is always something that we're going to look at. We've had a few things come kind of through the pipe, for example, that are healthy businesses with strong financials, but are essentially doing the exact same thing that we already do in one capacity or another. And those are things that we've decided to pass on because they don't really add anything to our business. So,
is there sort of a minimum scale that these companies are at, where if they're below that, you kind of are like, in terms of?
So Perfect World is a lot smaller than some of the other companies that are represented on this stage, and so we have our own bandwidth kind of requirements. It takes a certain amount of just person hours and institutional attention to do any kind of deal, no matter how big or how small it is. And so we don't necessarily have a hard cap or something in terms of dollars, but there's always the question of kind of institutional resources and the cost necessary to outsource those resources if you do.
Cool.
Maybe that's not too exact of an answer for you.
I was
but
looking for like
really,
X.
there's no
X to
dollar
Y.
figure.
No, it's fine.
Yeah.
Other thoughts for
I think a lot of it will depend on the motivations of the buyer, right? If someone is interested primarily from the financial standpoint, then there's going to be some financial benchmarks, maybe $5 million in annual profits, where those are the deals that start to get them excited. Whereas other folks, if they are primarily focused on the strategic side, are expanding publishing capabilities overseas, they're going to be looking at past track record, the talent of the team, so forth.
Mantin, for the HQ in China, is there sort of like a minimum threshold that you found they have for like M&A opportunities, or not, pretty open to date?
I don't think we have that kind of cap or what.
Okay.
Or I'm not the right person to answer this.
Amy, any?
I think from our point of view, it's more of a strategic fit. So we look at, obviously, healthy financials is very important. It has to be a meaningful scale for us because it means growth for our company. So whether it's in terms of users or channels or whatever additional talent that the studio can bring to us has to be of a meaningful size. So yeah, it doesn't really answer your question with a number, but...
so when you say healthy financials, basically you mean profitability?
Yes.
Okay.
Yeah, I think kind of to maybe expand on that a little bit. We all, NetEase is a publicly traded company, Perfect World is a publicly traded company. We have profit commitments that we've made to the equity markets, no different than a publicly traded company in the US does. And we have a finite amount of bandwidth with which to meet those commitments, right? So we don't have the ability to do 100 deals a year at $1 million a deal.
Right, exactly. So there's minimum size as well as some profitability. I mean, in terms of the process around M&A, was there anything unique that sort of Western folks should be aware of about sort of the workflow or sort of the diligence, speed, stuff like that might be different versus, working with maybe like a Western company?
Time difference and, be patient because large corporations take a long time to move things, move signatures, yeah.
Is there additional diligence? I mean, obviously you're traded in the U.S., right? So I don't know if it's pretty much standard like it would be for any other company. There's no additional sort of hurdles or something people are jumping through because you're sort of based in China?
I think the process is similar, but you do have government regulations on both sides of the world, so that's something additional barrier.
Okay.
Yeah, it can take a little while. It's not, a massive hurdle, but it can take a little while to move capital from one country to another country. China has very strong capital controls. That's not a huge problem. I think be aware of and accepting of the time difference. A lot of times, we can only do calls with, for example, a team over there and a team over here for a couple hours a day. And so that means we kind of need to line up what we need to talk about, make sure we get through it, and then move on to the next day. And it can make sort of spontaneous discussion and resolution of issues more challenging because you can't just go get a couple people on the phone and take a shot at something.
So I have a slightly different perspective on it because we've been working with companies that are looking generally to sell to folks in China. And so over the last couple of months, the deals that I've seen, it's actually been surprising how fast they go through and how rapid these conversations happen. So assuming there's interest in a company in exploring and the other financials look right and there's a strategic fit, then it's pretty easy to line up 14, 15 different conversations. Actually, I was in China last week where we brought a company around. Over a span of 1 week, we had them meet with 14, 15 different companies. They'll probably walk away with maybe 5 to 7 different offers. So in terms of the aggressive nature of some of these companies and the number of offers that they're getting, I think that's probably a little bit non-standard.
And the scale of the companies that you're usually working with is quite large, right?
Yeah, you'll get the full range. So some of them are publicly listed A-share companies in China. Some of them are smaller teams that just are very, very ambitious and have access to, let's say, private equity capital or something.
Cool. So I think from the investment side, I mean, thinking about kind of those opportunities, what are some of the factors? I mean, we talked obviously about talent, sort of genre expertise or market expertise. Is there other factors that are sort of catching your guys' attention when it comes to investment opportunities? And is there kind of like a minimum sort of life cycle of a studio that's sort of like the threshold? Are you guys doing like seed investments, or at what point are you kind of interested in those opportunities when it comes to like Western game studios?
For us, basically, we prefer to invest in very early stage teams, because we found that we can establish our bonding is better in that way.
In the last 4 years, we've been doing a lot of early stage investments, typically the seed round or at least the Series A. But the markets have changed significantly. I think for an Asian partner to work with the Western studio, it might make sense at a growth stage, because then we can, once you're established in your home market, then we can bring on the additional value in China, and also bring in our partners to help you leverage other platforms in China or in Asia, so to help the company growth. I think it makes more sense for, at least for what I'm looking at now, is to look at some growth stage companies.
Okay.
I really like Amy's answer.
Cool. In terms of like post-investment, like operational relationships, is there anything unique that you guys think Western developers should sort of anticipate around, okay, the deal is done, now you're working together with like a company in China, like is there any sort of different sort of relationship that they should expect versus like, working with like a Western partner?
So I think it will again depend on who the buyer is. For companies that do have a U.S. presence or have a lot of experience working across the Pacific, it may be a different situation. But a lot of the deals that we're looking at, it's companies that haven't expanded strategically beyond China yet. And so for many of these acquisitions that they're making, they're looking for the companies that they buy to establish the foothold in the U.S. And so in many ways, it's a hands-off approach, because they know that these companies are the ones who have the local expertise. And the deals are actually structured so that the management is retained over the long term, because they want to see their acquisition or their investment be successful, and they realize that they're not the kind of geographic experts in the area.
We have different models, but one of it is that when we decided to invest in a company, actually you can say that we trust it. So we give them whatever independency that they want. And we'll work close with them. I personally work very close with one of the team. I went there every week to talk to them and see what else I can help to facilitate them to succeed. And I can line up the internal resources to help the team, whatever they lead. And also we have another model that we will really have the team we acquired to bring them to our headquarters to work with our team. We assign our team members for them, because they have a small teams and they want to scale larger, so we will give them our internal resources. So either way, I think it's good. And the main thing is that we trust the team and we give them the independence?
I basically agree with that. Perfect World's approach in dealing with studios in the West has been a very hands-off approach, kind of dealing with companies on a case-by-case basis to be as engaged as they want. And so I think maybe the real lesson there is when you want to work with a partner, and be it a Western publisher or an Asian publisher, anybody, get a sense of what their track record is like. And I think it helps for Western companies to have an idea of what they want. Do they want to have a highly strategic relationship with a lot of engagement and leveraging of resources back and forth? Are they more interested in just capital and security, and they just want to go do their thing the way that they want to do it and be left alone? There are partners that can be engaged in different strategies. So it's really just about what you want.
I agree with what's been said on stage. For us, the approach has been very hands-off. We let the studios run their own operations. But that being said, a lot of the early stage startups, they are in need of advisory, especially strategically for the long-term growth. So I think it's up to the partner to provide that kind of insight, not just for that specific region in China, but also for the whole market. So that will be something that we do with our portfolios to help them grow.
Actually, to add on one thing, so one area that we have seen where the buyer and the investor gets heavily involved is helping in the China market. So for a lot of the Western companies, they see this as not only an opportunity to get capital or to exit from what they've built, but also to get into the very large and very fast-growing China market. Right? And so, of course, the local buyer, they're going to have the local expertise, they're going to have the local networks to really help that company succeed in China. And so that's where they will be relatively more hands-on and provide help to the company.
But Jim, I want to kind of talk about that point a little bit, because I remember at another conference somebody mentioned that you should never look at your publisher partner as ATM machine. A lot of studios tend to get the feeling once you sign on a publisher, then that's, the publisher will carry you through into China and will help you become a Chinese game. That's really not the case. The studio actually has to put in a lot of effort. You have to deliver a solid product, and the local partner can only offer so much help in the culturalization and whatnot, but the studio has to kind of have the right kind of expectations.
Yeah, I fully agree. I think to some degree, one element that does definitely impacts that is the type of deal that's signed, right? So for a traditional, let's say, no investment publishing deal, a lot of times you have publishers that will sign many games where it is kind of light touch, and they kind of see how the game does in the West, they see to what degree they can help out in China, whereas there are other models, other Asian companies where they make significant investments up front, or they do outright acquisitions. And in those situations, there's much greater just equity alignment in terms of helping the company. But it does require a good amount of, let's say, decision-making on the Chinese company and the target company's side as to, is this the right game for the market? How much do you really want to do to adapt the game?
Mantin, you guys invested in a local studio here. I mean, do you expect them to build a game that you could bring to China, or if it does, great, but that's not part of the expectation? How do you guys look at that?
I don't think I can talk about the details of the deal, but basically we let them do all the decision by themselves. Okay. But we will give, so other than China, we let them to do their decision by themselves. We will give them some advice, but they can certainly make their own decision. For China, we will give them all the suggestions we can. And also, some details I don't think I can disclose here, but anyway.
But you're not expecting them to make a game that will essentially work,
No.
Yeah, your primary focus is Western market success, and if it can work in China.
No, I mean, when they create the games, the major market is still in the West. Mm-hmm. But think about that. You can think about that. The games from China to the West is rarely success. Not too many games success from China to West. But there are a lot of examples that Western games getting to the China market, they are successful. they got popular, no matter mobile games or PC games. So we have a very very strong belief that the game's successful in West, we can also make it successful in China.
And Will, do you guys look at that? Is that a key decision-making factor, whether a studio's you're looking to invest in content you think would work in China, or is it really just Western?
Of course, not all the Western content will work in China, but when we talk about the investment, we talk about the project we are going to create, the team's going to create, we know that game is going to success.
Yeah. Is that similar for you guys, or how do you look at?
It is, but only to a limited extent. I think Mantin made an excellent point, which is that many of the Western titles, all of them that I can think of off the top of my head that do really well in China, were not designed with the Chinese market in mind. They were really successful Western titles because they're really good games, and guess what? Chinese gamers like those games. We try to look at things, new IP, through the lens of, is this going to be wildly unsuccessful in China? Because I think it's maybe a little bit easier to predict things that are going to fail terribly than what's going to succeed. And so if we see things from our studios or from potential partners that we're like, maybe this could work over there, then I think that's kind of our decision-making process. But I mean, Mantin's absolutely right. For Western developers, try and make games for the Western markets, and if they're successful, then maybe they can work in China.
Cool. So for folks in the audience or who Western studios interested in these opportunities, if it's M&A or investment opportunities, like what's the best way to kind of engage with potential partners in Asia? Obviously, very far geographically. Is there any sort of unique sort of aspect to it that's different than maybe trying to connect with like local VCs or whatever it might be? Any tips that you guys can look for or provide around kind of that advice to engage if they are interested?
I think the easier one is to attend more China game conference, including the China Joy, GTC China, things like that, to meet the potential partners that you might work in the future. And the easier way is just contact me, talk to me, we can talk about that directly.
Yeah, we have Western-facing business development people. NetEase has Western-facing business development people. I think there's a lot of people whose job it is to listen to pitches. So you can always reach out. I've actually talked to a few developers recently who just took like a month or month and a half long vacation, went to Beijing and hung out in PC cafes and watched people's playing habits and met with developers, networked, just to learn more about the market and who the players are and what games do well there. So I think there's a lot of different ways that you can go about it, but certainly just getting your feet wet and seeing what the market is about is a good way to go about it.
Yeah, I think there's definitely different pools of potential investors and buyers, right? So there's a group of companies that are very internationally savvy, represented, partly by the folks here, the Tencents of the world, where they have corp dev investment BD teams, attend these conferences, do outreach. There's a whole nother pool of companies where, to some degree, they have been focused on China. They're just starting to look overseas. And for those, I think it's connecting with financial advisors or investment banks that have run these processes. So for example, last week when we were over there, we met with the 15 companies. I think there were maybe 2 or 3 that had a significant presence overseas or attended these types of events. So depending on kind of what it is that you're looking for, I think you want to talk to folks who've kind of run these deals before.
Any other wisdom?
Not much wisdom, but just go out, network more, get some warm references, go to the after parties and drink with some people and get the inside scoop on, who you want to talk to and who you don't want to talk to.
Yeah. So it's similar. Sounds similar to regardless of geography.
The one thing I'll add there, I won't assume that everybody in our audience here is from the United States. The UK has a trade association that takes a bunch of people to China Joy. Finland, Sweden, Canada. Maybe we don't have one in the United States. Apparently not. But there are a variety of governmental organizations and trade organizations that kind of organize missions. And that can be a good way to kind of get your feet wet and go meet some folks if you're kind of new to the process.
I'd say also just tell people that you're interested in this, and then people will make referrals for you, right? So whether, there have been companies that work with us, but I also know of several companies who have just said, all right, I'm making a trip over to China, who can you guys introduce me to? And then they line up, 10 meetings on their own. It's a little bit more kind of haphazard, but certainly there's a lot of people who do it.
So obviously, making connections, seeing opportunities, like how do you recommend folks do diligence around potential partners? I mean, obviously, like you guys on the panel are probably much easier due diligence, but I mean, is there any sort of tips that you can provide? Because it's not like you can just go to your developer community and be like, hey, have you worked with these companies? Any sort of resources or recommendations you guys have around, making sure your partner is going to be a sound one?
So you can go to your developer community and ask what it's like to work with people, and that's absolutely where I would start.
Yeah.
Other than that, I'm not sure.
I think that basically talk to people, talk more. Yeah. So if people work with some publisher or partners that they're not doing well, they will let you know. If you tell him, hey, I'm going to work with this company, and they will tell you, hey, maybe you should look for other opportunity, things like that.
How have you guys found, I mean, obviously, again, I think for some of the bias panel, since you're all very sophisticated in the Western market, I've seen a lot of situations where sort of potential investors or acquirers from Asia, like, again, they're looking to come to the West because they want to grow into this market, but they aren't really familiar with the market. So then they try to evaluate these, these opportunities with different companies, and surprisingly, like the sort of market dynamics are somewhat different in the West versus Asia. I mean, how have you guys seen sort of this lack of awareness and understanding impact potential? Basically, I get a lot of feedback like, oh, this seems too risky. Everything seems very risky, and I think that's because of lack of understanding. Is this something that maybe you don't experience with your companies, but you sort of see in the marketplace? I mean, maybe Jim sees it more than...
Yeah, there's definitely a healthy dose of understandable skepticism when we talk about these types of deals. Like, when I'm talking to some of the teams I've worked with in the past and trying to explain how much demand is in China for these types of deals, a lot of people are kind of somewhat unbelieving of the valuations. I think one way is, of course, you look at the deals that have already been announced, right? Hundreds of millions of dollars for gaming companies in the West coming from China acquisitions. I think another element is, doing the research on your own, especially for some of the international companies. Like, people who have worked with them before will be able to give you information on what it's like to work with them. I think somewhat more unknown is, some of these companies that haven't made these international deals, right? I think that's where it's really dependent on the financial advisors or whoever you're working with to help you structure a deal where your interests are protected, and the deal certainty is more of a, let's say, criteria than the absolute valuation.
Do you see lack of sort of awareness from sort of the buyer side being an issue, and like sort of these deals falling apart? Or is that obviously? Yes,
certainly. A big reason why some of these deals happen is because they're interested in expanding outside China, and these are markets where they don't understand, right? Which is, that's the driver for a lot of these deals. And whether it's understanding of market norms or how these deals typically work in the West, there is a lot of unknowns there. So sometimes for them, it's a learning process.
Cool. So we talked about earlier some of the sort of interesting market dynamics of China and publicly traded companies sort of delisting in the Western market or the US and relisting in China, or you see companies that traditionally are like manufacturing, acquiring gaming companies. For folks who aren't aware of kind of the drivers of this, can folks sort of add some color around sort of why these things are happening and why people are relisting and why a chicken farming company is buying a Western gaming company? Anyone want to?
We're still listed in the US, so maybe Will can talk about it.
Yeah, so we used to be listed in the United States, and then we went private, and we recently got back onto the Shenzhen index. The multiples are a lot better. and as Jim said very succinctly, that enables us to do more deals in the West. I lay you buying Splash Damage is pretty fascinating. We had a mining company by Jagex for a whole lot of money. So it's not just game companies that are leveraging their larger Chinese multiples. There's a lot of, and you could totally speak to this, there's a lot of capital in China that is looking for a place to invest it outside of China. And gaming is a very high growth market. So I think people are interested in that.
I think this is where for those guys, it is to some degree more about the financial component. At least it plays more into their overall decision, right? So if they're in the construction business, if they're in the chicken, poultry business, they have decent margins, but the multiple that they're seeing in the stock markets over in China are not that high relative to some of the new economy companies. They're seeking to pivot their business so that they can see that bump in that market cap. And so that's what's driving a lot of these deals. But at the same time, there are market regulations in China that are changing. And so, a couple of weeks back, the government, the CSRC, which is essentially China's SEC, provided guidance that they're less likely to approve these kind of backdoor listings where a company will privatize and then buy a public company in China to list, or cross-sector acquisitions where it's a company that has no affiliation with games or ads or mobile whatsoever buying into these companies. You will see some still happen because, let's say, if they've already done some deals even locally within China, so they have some footprint within that sector, you'll still see those go through. But I think the pure random companies that are buying into games, those you might see a little bit less of.
Interesting. Always a lot of interesting things going on in China. So in terms of the sort of deal flow and just the volume of transactions for like M&A investment, obviously we're seeing a lot of companies, even from Korea, doing similar deals. For Asia in general, what's your sort of hypothesis? Is this we see more deals in the near term, like less, gonna stay the same? Curious to get everyone's sort of general insight. I mean, obviously there's various factors in terms of economic factors, but yeah, I'd love to hear everyone's sort of hypothesis.
I think the trend is going to grow, continue to grow in the next few years. The games entertainment industry is becoming more and more global. So this kind of consolidation across different regions is a natural trend.
So we got one for Grow.
So what will end up happening in the global markets and the Chinese market specifically over the course of the next 12 to 24 months is going to be interesting. And there are people in this audience who could better kind of foreshadow that than me. With that said, I don't see the drive to invest in and acquire Western companies slowing in the gaming space at all.
Okay. So is that a more or the same?
I mean, I wouldn't be surprised if the growth rate slowed. But 2015 was a really terrible year for Asian M&A into the West, and 2016 has been an absolutely phenomenal year. Are we going to see growth like that? I don't know, but we're going to keep buying and investing in companies for sure.
If you're saying compared to 2015, of course we are going, but in 2017, like what Will just said, I'm not sure because the Tencent buying Supercell, this is a large deal. So generally, I think the trend is still going. Compared to 2015, definitely it will better than that.
I say there's factors, even setting aside Asia and China, where I believe the game sector is going to continue to consolidate. Right. So especially on the mobile side, given how expensive UA is, given that production values are increasing, given the importance of IP and the limit on high quality IP and the folks that can really afford those high quality IPs, you're going to see more consolidation and fewer large companies, I think, in mobile gaming, period. Now you add that to the fact that you have all this capital coming out of Asia and China, and I think specifically in gaming, you'll see it continue to accelerate, and even in other sectors, whether it's real estate, whether it's ad tech, unless something significant changes regarding the ease of raising capital in China or the valuations that companies are seeing out there, I don't see any diminishing of this overall trend.
Cool. So I think we're getting close to the end here, but would love to kind of get some, insight, because obviously the market in specifically China changes very quickly, mobile gaming and gaming in general. Obviously on the mobile gaming side, we've been hearing a lot about sort of these new government regulations and approval process. It's somewhat unknown. How do you guys see this impacting kind of the gaming space in China in general, but especially for like Western developers? Like, what do these changes mean? Maybe we don't know what exactly is going to happen, but generally what do these changes mean and how is that going to impact folks, both locally as well as internationally? Any sort of wisdom or insights you guys can share?
I think it creates an additional layer of complexity when you want to ship a game to China. It doesn't mean that you can't do it. The government just wants to take away some of the profit. But I did a talk earlier today looking at the markets in China in 2015 versus 2014, and the number of successful non-Chinese games reaching top 50 has dropped by more than half. So the competition is getting quite fierce in domestic China market. So for you to move your product successfully into China, you have to make sure it's a solid game that performs well in its own market, and then you can reach out to the other geographies: China, Japan, Korea, Southeast Asia. Look for the right partners to help you grow the company.
When you're considering making an acquisition, to what extent do you rely on outside consultants to do due diligence, like a Kroll or whatever the equivalent is?
So we leverage both internal and external assets, and just deal scope is the main factor. Do we have enough internal bandwidth to handle it or not? And if we don't, then we work with partners. A big thing for us is our offices here are based in the United States, but we're looking at transactions in Canada, Europe, CIS, Russia. So the capability to do things kind of cross-border and in different countries is something that's important to us when we look at working with consultants or service providers of any kind.
Yeah, we have deals working with our consultants.
So you've been talking about doing stuff in China. What about other Asian regions such as Southeast Asia? That's a great market, lots of English-speaking people, not that much cultural differences. Do you like this market? Do you think it's gonna grow? Are you looking into this overall?
So you're talking about just the Southeast Asia market in general, not related to like transactions? Yeah, I think it's, from my perspective, it's like growing very fast, but at this point it's still very small. So I think for a lot of companies focused on mobile gaming space, basically they're all pouring in and trying to sort of capture the market. Because like we talked about, like there's a few large companies, 2 of them are on this panel, or 3 of them are on this panel, that have captured like China, and the same thing's happening in Korea. So, but I've heard that the revenue you can generate from like the mobile gaming side is pretty small, and a lot of the local companies have actually started pivoting back to like focusing on like PC games, which has traditionally been. So it's complicated, languages and purchasing power and technology and hardware and networks and stuff like that. That'd be my no.
Yeah, we're not ignoring those markets. We have mobile publishing operations in Indonesia, for example, and we're starting to talk to some of the sort of nascent companies, developers, outsourcing folks in Vietnam, which I think is kind of an interesting growth area. But the markets aren't really sufficiently mature for the kind of investment in M&A that I think we're kind of talking about.
Yeah, I think if you're a smaller studio, it could be interesting. Get in early.
I think to that point, Josh, if you're a small studio, you might find less competitive landscape in some of the smaller markets, such as Southeast Asia. And there's certainly strong publishers in that space. We invested in a tech company called Mob Vista. They are a Chinese company that started out in Southeast Asia, and they've grown just tremendously in the last 3 years. They got listed in China last year, has a $1 billion market cap, and now they're acquiring companies in the West. They just recently acquired Game Analytics out of Denmark, and last year I think they did
NativeX.
Thank you. So that's somebody you can partner with for Southeast Asia. It takes a lot of nitty-gritty work because there's so many fragmented countries with different language supports, but there are publishers out there who do it.
And Amy, just so everybody understands, because I think working in the European markets and the US market, you know, we have kind of consolidated app market spaces on mobile, but the distribution of games is very fragmented on mobile as well in Asia, isn't it? Many different carriers and distribution centers.
Yes, for China, you have one Apple and 400 or 500, different Android channels. So it takes a lot of SDK work to get your game out there into the Android channel in China. So that's why working with somebody with a sizable publishing team can help your studio to position the game for a China market.
Cool.
Well, thank you so much. It was very, very kind of you to spend this time.
Awesome. Thank you.